The order block is one of the best ICT concepts out there. However, so many traders are trading it wrong. This is because there's so much misinformation about how you should actually trade order blocks. However, in today's video, I'm going to clear all the confusion and teach you guys the real way to trade order blocks. I'm going to go from A to Z, how ICT teaches it, how ICT has revealed this strategy to everyone. I'm going to be showing you guys everything from how to outline order blocks, what makes a valid order block, and a step-by-step breakdown strategy so you guys can trade order blocks for yourselves. So let's get into the video. Now, before we move on to any sort of strategy, I want to show you guys 5 steps to validify an order block. So starting off with step 1, we want to look for a break of structure. Now, this can either be to the downside or to the upside. Now, what are levels of structure? We want to look for key levels of structure such as old highs, old lows, equal highs, equal lows. You want to look for resistance, support. Any significant level of structure that is broken is a valid break of structure. So moving on to number 2, we want to look for displacement, which is basically our increase in volume. As you guys can see, once our order block forms, we want to see market run away from it very quickly, forming these big candles, which we call displacement, which leads us on to our step 3, which is market leaves an imbalance. Now, if you're not sure what imbalance or fair value gap is, you can watch my video on fair value gaps, which will run you through everything you need to know. However, as you guys can see, we do get an imbalance left in the market. Now, why do we look for an imbalance? An imbalance signifies that market has moved too quickly, therefore has left an inefficiency, which shows us market is more likely to come back to this inefficiency and fill it, so it's more likely to respect our order block. We want to look for engulfing candle, guys. So with the engulfing candle, we want to look for one bullish candle and then a bearish candle. This is for a bearish order block, as you guys can see. Now, as you guys can see with our engulfing candle, our bullish candle, and then we have a bearish candle which is bigger, which engulfs the bullish candle. This is what makes it an engulfing candle. Now, as for marking out our order block, we want to mark it out from the engulfing candle. So as you guys can see here, an order block is the last up move before the down move, or the last down move before the up move. So as you guys can see here, this is our last up move. So we'd mark out our order block just like this, as you guys can see. Now, moving on to step 4. Now, I know a lot of people don't add this on here. However, with the saturation of smart money concepts and many people using order blocks, over the years, order blocks have become less effective. So, to filter out the order blocks that are low probability, you want to look for order blocks without liquidity against them. Or we want to see a market sweep the liquidity before we have our order block form. Because if market has liquidity against it, if market has equal highs up here with our order block, what market is likely to do is to liquidate those lows, take out your position before continuing in the desired direction. So we want to look for an order block with no liquidity. Market is attracted to liquidity. Market will take out that liquidity. So if we have no liquidity against our order block, it is safe to take. It is a high probability order block. And now on to step 5. This is pretty simple. No mitigation back into our zone. So once our order block has formed, we don't want to see no touches back into the zone. Once the order block is mitigated, you can no longer trade the order block as it has been mitigated. So we want to look for only order blocks that have not been mitigated. So now, with all that said, now you guys do know what a valid order block is. It's time to move on to the step-by-step breakdown of the order block strategy. Now, this is an easy 5-step strategy that you guys can implement into your own trading to become profitable. Now, what are the conditions of this strategy? We want to trade it only during London session, New York session, and we can trade it on any pairs and indices. So, as for time frames, we're going to be flicking between the 4-hour and the 15-minute. 4-hour primarily for our higher time frame bias, and the 15-minute for our lower time frame bias. So, moving on to the step-by-step breakdown. Starting off with step 1. We want to look for our higher time frame bias. Where is market moving overall on the higher time frame? Are we in an uptrend or downtrend? It's as simple as that, and we want to trade with the trend as opposed to trading against the trend. Step 2, higher time frame order block. We want to look for an order block on the 4-hour time frame and look where market is leading to. If market is leading to that order block, we want to move on to our step 3 and drop down to the 15-minute time frame for our lower time frame confirmation. Now, what confirmations are we looking for? We are looking for a market structure shift to indicate a change in trend. Now, what is a market structure shift? A market structure shift is simply a reversal pattern which indicates to us that market may be changing in trend. If we are in an uptrend, as so, as you guys can see, we're on an uptrend. If we begin to then get a change to the downside, we get a change in momentum. As you guys can see, we're moving upwards. However, here we do get a change in momentum. As you guys can see, we're going from going up to going down. This is our market structure shift. This indicates to me that market wants to move lower. This can confirm our bias to the downside, where I can begin to take my entries off an order block up here and begin to sell the market, for example. Now, this brings us on to our step 4, lower time frame order block entry. Once we've had that tap into our higher time frame order block, we want to drop down to the 15-minute and look for a lower time frame order block. Now, most times market will form this order block where you'll get a chance to get that re-entry with a confirmed bias to the downside or upside, depending on the scenario. Now, as for number 5, targets are quite simple. As for your take profit, guys, it's good to partial and it is good to target opposing liquidity, such as equal highs, equal lows, significant levels of structure, anything of the sort. You could even target opposing order blocks, fair value gaps, anything of the sort. As for your stop loss, you simply want to put it above or below the old high or low. It's as simple as that. Before I continue with the video, I'm happy to announce that I will be running an account passing and management service. Now, this is a new and premium service that we are offering. So to start off, you'll be able to use our trading bot on prop firm accounts, personal accounts, live accounts, etc, etc. Now, we will pass and manage your accounts for up to a year using our trading bot, which will passively generate you profits. Our trading bot works so well, as you guys can see from our testimonials and results. With AI taking over, I suggest you guys do not miss out. You missed out on dropshipping, you missed out on crypto, you missed out on NFTs, and so many more opportunities. Don't miss out on AI trading. Now, if you guys do have any questions such as expected monthly returns, past performance of our trading bot, etc, etc, make sure to drop me a message on Telegram by firstly joining the group at Pass My Challenge, first link in the description. I'll see you guys there. Now, with all that said, it's time to move on to some real market examples. So, let's go. Alright guys, I'm currently on EURUSD, showcasing a trade using the order block strategy. So to start off, this trade ran 1 to 7, hitting about 100 pips, which is absolutely amazing. Now, this trade did run for a bit more, for about 114 pips, which you could have caught yourself about 1 to 9. However, we did take profit at this low right here. So to start off, I'm going to remove all drawings off my chart and hop onto the 4-hour time frame where I can start to show you how I found this trade. So let's remove drawings. So on the 4-hour time frame, if I do replay market slightly back, now as market is playing out, I did spot this lovely order block right here, as you guys can see, and I did see market reacting off it nicely. So at this point in the market, when I do see this valid order block, as you guys can see, we do break structure to the downside. We do tick off all the steps necessary. So if I do head back to my checklist, as you guys can see, so start off break of structure, which we do get to the downside. As you guys can see, I'll label this my break of structure, BOS, break of structure. So moving on to number 2, displacement. As you guys can see, we do get candles with a lot of volume here. As you can see, big candles we are getting, which ticks off our step 2. Step 3, market leaves imbalance. Where do we get imbalances? We get imbalance right here, which shows us market would want to come back, return to this level in order to fill these imbalances. So there probably is quite a lot down here as well. Maybe there is a tiny fair value gap right here, which I will not count. However, as you guys can see, market does leave imbalances on our order block. So on to step 4, market sweeps liquidity, or we have no opposing liquidity. Now, if I zoom out of my chart, you can see there is no clear liquidity. So we have this old high, however, this has been swept. Now, as you guys can see, moving on to step 5, no mitigation. As you guys can see, we get no clear mitigation back into our zone, apart from right here. So once we get this tap, we want to drop down to our 15-minute time frame and start to look at our checklist again. So what can I see? So I do see a lovely order block which is left behind right here. As you guys can see, I could go through the checklist again. As you guys know, we leave an imbalance, engulfing candle, whatever, we get a break of structure to the downside. So this is another valid order block which has been left behind from the higher time frame order block. So once we get that higher time frame order block mitigated, we want to drop down to our 15-minute and find another order block. So now that we've done that, we want to look at a step-by-step breakdown. So we've got on our higher time frame bias, our higher time frame order block, our lower time frame confirmation with our market structure shift. Where do we get our market structure shift? Now, we do get a market structure shift right here. As you guys can see, we went from forming higher highs, from market moving up generally to getting that change in momentum where market is starting to move downward now. We're getting that change in momentum, which shows me market now wants to take price lower. So with that confirmed, we also do get another market structure shift here. As you guys can see, we do get body closure. However, it is very, very slight. However, it's still a valid market structure shift where we are having market change in momentum, as you guys can see. So from here, it is so simple. We are just going to look for our entry. So I'm going to place my limit order. As for my stop loss, I'm going to place it above the order block, above our higher time frame order block. If I could just make this a bit clearer. Okay, so stop loss above our higher time frame order block. As for take profit, I'm going to be targeting opposing liquidity. Now, it is up to you whether you like to partial or not. Now, you could very easily partial here, you could partial here. However, I'm just going to put full take profit here, just for reference of the strategy, just so you guys can understand the strategy better, instead of learning how to partial for now. So, now, if I do play out market, you guys can see, we do get a very, very clean touch. As you guys can see, market does tap into our order block. With that tap in, we've been entered, and we're in absolutely zero drawdown, as you guys can see. It's absolutely beautiful. With our stop loss this high, we are not getting stopped out, especially with zero drawdown. So if I do play out the trade, you guys can see how quick market moves, and we end up hitting take profit, full take profit very quickly. Now, if you risked 1% on this trade, you would have made 7.5%, which is absolutely amazing. 100 pips is an absolutely great trade. Now, this strategy is so simple, even a beginner could learn it. So, alright guys, time for the second example. Now, I am on EURUSD again, and I'm sure you guys are up to date with the strategy, with the checklist, how to validify an order block. So, moving on to a quite brief example, I'm going to play out market. And as you guys can see, we do get a tap into our zone. So, now if I do drop down to a low time frame, such as the 15-minute, which is what we are doing, we are flicking between the 4-hour and the 15-minute. If I do look out for our order block that is left behind on our lower time frame, so if I do play out market, and as you guys can see, there we go. This is the first order block that is left. As you guys can see, we do get our engulfing candle right here. So play out market, you guys can see we do get a beautiful tap in. Now, this is our place to place our trade to long the market. And now, where can we place our take profit? I do see a very nice opposing order block right here. As you guys can see, we do leave behind a nice imbalance, and we do get this order block right here. So this is my take profit for about 40 pips. So this trade is a nice 1-to-3, which you could have caught using this strategy. So if I do play a market, you guys can see we do end up taking full take profit. So it's as simple as that, guys. I hope you guys enjoyed today's video. Make sure to check out the new account management and parsing service in the description below. Join the group, and I will see you guys next time.